Hey, welcome to the exchange. Hey, let's take another look at Lucid real fast. Look at the cash they have on the balance sheet as well as their cash burn rate. Also, I missed this too last month. They signed a massive line of credit agreement with Bank of America. What that means for a short-term and a long-term investor. So this is their last 10Q statement, basically a balance sheet statement they had. And this is as of March 31st, 2022. They had roughly $5.4 billion in cash and cash equivalents, which is it's a massive amount of money they actually have. They actually gained a lot of cash when they actually were publicly listed and they SPAC'd out. Now, the problem here is actually not necessarily the cash on the balance sheet, it's really their cash burn rate itself. So you saw my last video, you're probably familiar with this actual spreadsheet right here, but look at 2022, look at free cash flows, it's negative 3.6 billion. So again, you have 5.4 billion in cash. I'm saying in 2022, you're burn roughly $3.6 billion. It gets worse. I'm saying in 2023, you're going to burn roughly $4.2 billion. So that cash itself on the balance sheet will be gone entirely. I'm saying by end of 2023 without any kind of further injections or further equity raises overall. So to help alleviate some of that liquidity fears, really for 2023, they actually entered this agreement. This actually was entered on June 9, 2022. This was from their Form 8K, which all that means is a material public filing. They actually had to report to the SEC. Scroll down here real fast. So you see, hey, on June 9, 2022, Lucid Group incorporated into a credit agreement with Bank of America, North America, which all this really means is basically a credit card for a company as a whole itself. So basically you take out cash, you pay cash back, and it revolves back and forth over the course of the agreement, which I believe ends in 2027. So this is a pretty long-term agreement overall. What you see right here is up to $1 billion right here of a senior secured asset-based revolving credit facility, which all it means when it says senior, it just means in the credit stack itself, it's a very, very high tranche. So in case Lucid actually defaults and actually goes bankrupt itself, the claim on assets of this actual credit facility is a very high, kind of in the ranking itself in the event of a major default. Now, secured asset base, basically all it means is, hey, if they default itself, they actually have a claim, they actually have a right to claim certain assets across receivables, property, plant, and equipment, inventory, etc., and take those and put them on Bank of America's balance sheet. And then from there, sell those assets off to basically get cash back. So it's actually a safer loan in a way than unsecured notes, which is like, hey, here's cash up front, pay us an APR, and if you default, we're basically out of luck at that point. So looking at the actual APR on the interest itself, this is very, very cheap debt. And really the math's kind of complex a little bit based on market conditions and everything else too, but it's roughly a 3 to 5% APR. So this is very, very cheap for a corporation. Now, a true unsecured loan for Lucid is probably about a 9 or 10% APR there. So again, this is not expensive debt itself, but it is showing, hey, Lucid thinking about, hey, possible fears of a credit crunch in the future if they hit major recessionary environments and credit tightens up, just like it did in 2008. So what does this really show me for Lucid itself by having this credit facility? It really shows me, hey, the cash burn rate is getting very scary. Really not for now, but really for 2023. And based on the cash they have on the balance sheet itself, they're going to need a capital injection in 2023. It's almost going to happen. Now, this will help them, this $1 billion itself, but they're going to need a lot more than that, really for the long-term sustained growth itself. So what I'm saying right now is from 2023 kind of and beyond, they're going to need roughly around $10 billion of additional capital injection, whether that's, hey, just raise new debt or have an equity offering itself and dilute current shareholders by a large amount overall, which again, it's going to happen either option A or option B just because of the cash burn rate they have right now and as they ramp up itself. Making cars is very, very expensive. And that's what they're seeing right now for Tesla, Lucid, Rivian. It does not matter who it is. Is it very pricey industry overall to actually break into it and actually get those economies of scale? Now, if once you get there, like Tesla, it can be very, very profitable. That's a very hard path to follow. Hey, but that's Lucid. I'm also going to update to the spreadsheet entirely once we get the Q2 earnings release, which I believe is an August timeframe. But yeah, I'm going to go through it line by line, see if, hey, above trend, at trend, below trend. Also do a brand new valuation overall too. Hey, but be sure to sub in the corner right there for updates on Lucid itself, as well as other stocks I cover on the channel too. Also, if you have any stock ideas you want me to cover in the future, be sure to drop it in the comments down below. But yeah, until next time, that's the exchange.